Good evening, everyone, and welcome to the Brian Crombie Radio Hour on Saga 960. We're going to talk real estate tonight with Vanessa Topple, who is the lead anchor and producer of several different TV shows on the real estate industry: Bold TV, RHB TV, Krebs TV, etc. She's a real estate investor and real estate broker. She's been in the industry 15 years, and she specializes in the Greater Toronto area. Vanessa, welcome to the
Yes.
show.
Thank you so much for having me back, Brian.
My pleasure. So you're very involved in not only selling and buying real estate as a broker and as an investor, but now you've launched several different TV shows on the internet and elsewhere on the real estate business. Why so much interest in the real estate business today?
I mean, I think you can't turn on the TV or the radio without hearing something about the real estate crisis, as a lot of people like to term it. And I think my background in real estate and in the buying and the selling, not only in the residential but commercial industry, sort of led me on this path of working for the station that I work for right now, which covers everything real estate. And I think it's a very interesting, I'll call it a niche, but an interesting niche, because there's a lot of noise out there and a lot of different opinions. And one of the things that our station tries to do, especially, is really sort of sort through all of that and find out what is actually going on. So we do a weekly news broadcast that is really looking through all of the headlines and all of the stuff that we get, inundated with, and really sorting and breaking it down to see what is actually going on.
So tell us, if you could, what is actually going on. So the Prime Minister, recently talked about how we've got this housing supply crisis and we need to dramatically increase supply. It's certainly something that was the focus of the federal budget, the provincial budget. Premier Ford has been talking about, not necessarily doing, but talking about a lot of things to increase the supply. But then at the same time, the Prime Minister was talking about how we don't necessarily want to have a big depreciation in housing prices because so many people have created their retirement net worth based on appreciation in housing prices, and that would be a real negative. So, are housing prices, do you think long term going to go up, going to go down, or going to go down and then up? What's going to happen? And I think playing into this at the same time is that obviously the Bank of Canada reduced the Bank of Canada rate by 25 basis points a week ago, and a lot of people got excited about that. And then other people are saying, yeah, but there's not going to be a lot more that's going to happen. And so therefore, wait a long time. And 5-year mortgage rates hardly moved at all. So what's your assessment of the environment for residential real estate right now?
Well, I think right now, when we're looking at residential real estate, we have to look at it as a whole. I always tell people that the real estate market is a living, breathing entity. It's not just one factor that sways it. So usually we look at things like supply and demand. We still have massive, massive demand for housing. Several factors have started that process. One of them, which I know has been heavily talked about, is immigration. We've had, quite a few new people coming into the country over the past couple years, something that the government is now trying to backtrack a little bit and try to regulate, because they're saying that this has contributed maybe to the issue. I don't think that any of the steps right now, to be very honest, that the government is trying to do, it's sort of one step forward, 2 steps back. A lot of these issues that surrounded the real estate market should have been addressed and looked at about 5 to 10 years ago, when we started to see, the housing prices shooting up. And it's a little bit interesting. So I bought my very first house when I was about, I think it was about 2002. I bought my very first house, $164,000 in the city of Barrie. It was a brand new build home. By the time I actually moved in the next year, that house was already worth about $270,000. So already, even at that time, we were seeing those prices jumping up. I think back then, that was the time to start to really see what was going on and whether we could get more housing starts going at that time. And I think there's been complications over the years with materials and costs of that. And also, one of the biggest things that a lot of people don't look at is we use concrete foundations. And so there's a very big labor shortage to find people to do these concrete foundations. And when it's the beginning of any housing development and you can't get those people and those companies in there fast enough, you're going to have this big backlog as well. There's a lot of different reasons that we're in the situation that we're in, and I don't think there's any one solution. I do understand what the government was doing when they started to raise up the interest rates. They were trying to, slow everything down, even with the advent of, the very controversial capital gains that's been introduced. Again, the raising of the capital gains and all of these things. What they're trying to do is sort of slow down that investment side of real estate so that everybody can just have their home and not, multiple people owning multiple homes. But again, it's gotten so expensive that not everyone can afford to have their own home. And so, there are those people who still need to provide housing somewhere, whether it's for rentals or whatnot. So it's a very tricky situation that I don't think one solution is going to get us out of anytime soon, unfortunately.
So I agree with you, but it's something that needs to be solved. I think that RBC, Royal Bank of Canada, came out with a big report that said that there's going to be 2 million people looking for a home in the Greater Toronto Area in the next 5 to 8 years, and only 1 million of them are going to be able to find a home. So there's going to be a million people in the Greater Toronto Area that are left unhoused, effectively. CMHC has been saying that we need to get 3.5 million extra homes built in Canada, 1.5 million extra homes in Southern Ontario than would be built on a normal basis. Some people are saying that we're building 50% of what we need to build. Other people are saying we're building 20% of what we need to build. So every single statistic says that we're building a lot less than we need to build. And so therefore, yes, you're right. Demand is increasing because of population growth, because of immigration and other reasons. But supply seems to be the biggest challenge. And yet right now, you'll know this better than I, but I understand that the supply of listings is at almost an all-time high. So lots of people in the resale market are actually trying to list their home today. So how do I compare and justify and understand this dramatic lack of supply, but this sort of huge amount of supply of listings?
So it's interesting because a lot of people where you're seeing now, they're getting out of their resale home, they're trying to list it. And this is where we're seeing this increase of supply on the resale side. It's becoming at a time where when they got their mortgage at a certain period of time, it was a much lesser, amount. Now, all of a sudden, with the interest rate that shot up over the past few years, even though we're starting to see that decline come down a little bit, as you mentioned, some people's payments went from things like, $2,700 a month. But when it's coming time to renew, they're being told it's $6,000. And for a lot of people, that's just not feasible. When you plan to all of your expenses, when you're going to live in a house, you plan very much around your income, your savings, and everything you're working with. And to suddenly go back to say, okay, my mortgage is up for renewal, and suddenly it's double or more. It's just not feasible for a lot of people. So they are having to offload that house.
Do you think a lot of the people that are listing their homes right now are listing it because they can't afford to refinance their mortgages at high interest rates today?
I'm seeing a lot of it. It's
interesting. I see a lot of distress sales in my business. And is that symptomatic of this situation where, people are desperate because they just can't afford the higher debt levels and the higher interest rates?
It is. It's something we haven't seen. We haven't seen those kind of sales. In my career, I hadn't seen them at all. This is the first year I've seen an uptick in, I think I'd seen maybe one or two my entire real estate career. I've seen 7 so far, in the last couple of weeks. And so I think that's really telling. And I think it's very distressing too for people to, they've lived in their home for so many years. They've made it their home. It's one of the securities when you own a home. If you're renting, there's always that threat that your landlord could say, I have to sell or you have to move. But you have a sense of security when you own your home. And then to suddenly be told, well, it's your home, but now you have to pay a lot more than you ever expected. It's a very unsettling feeling. So I do feel bad for homeowners right now.
So supposedly 50% of all mortgages are going to come due in the next 24 months. And so therefore there's going to be a lot more people that are going to be faced with the situation of renewing their mortgages at substantially higher interest rates. And yes, the Bank of Canada reduced their interest rate, their short-term rate by 25 basis points. My understanding is 5-year rates didn't move at all. So that the long rates that people, that want fixed rate mortgages are looking at, we're already anticipating that there were going to be rate reductions, and so therefore didn't move, and so therefore this rate decline hasn't benefited people that are refinancing their mortgages at, as you well point out, 2 to 3 times higher than the mortgage rate was when they initiated it in 5 years ago, which would have been 2019 and next year 2020. So what's going to happen if 50% of all mortgages have to renew at interest rates 2 and 3 times higher, mortgage payments 2 and 3 times higher than they initially were paying?
So I think a couple things. I mean, we obviously don't have a crystal ball. It would be nice to know. One of the strange things is during COVID, everyone thought, oh, housing prices are going to fall because no one's going to afford it because people were losing their jobs. And COVID was one of those times where we saw the housing market prices shoot way up. It was very unexpected to everyone in the real estate market to see that. So I think sometimes when we think things are going to happen, we also get surprised by it. So I think we just have to be prepared. I tell people right now, the real estate market's like the Wild West. It's growing, it's evolving, it's going through those pains. It'll be interesting to see how we come out on the other side. One thing I do think we're going to see a lot more of, though, is extended families living together. They're making a lot more opportunities now to have sort of those granny flats on the property now. So if you already own a property, you can build a secondary home on that property now for extended family. So that's something that people might start looking into more. Having 2 or 3 families living on a property just to be able to sort of help pay for those costs.
Well, and rental rates are high as well, are they not? And so therefore, if you're actually renting, an extra floor or a basement apartment or a granny suite or a laneway house or something like that, you're making good money on the rental.
Yeah, I mean, rental prices are at an all-time high right now, and the market is extremely, extremely competitive. I mean, I've had clients who have been looking for rentals. They have, sometimes they've either decided to go and live with family because they've said, like, this is our 6th offer now. And it's really coming down to, it's a twofold when it comes to the rental market, because you have tenants who can't afford to necessarily live and buy a house, so they have to rent. But now there has been so much turmoil when it comes to the landlord-tenant board and landlord and tenant relations that a lot of landlords are scared to rent out to anyone anymore, because there have been sort of what we call in the business professional tenants who are anything but professional and, damage the home, non-payment, because they know that right now the Ontario Landlord Tenant Board is so backed up, almost a year in some cases, that they can get away with that kind of stuff. And so it's turning a lot of landlords sour as well. And so it's this very interesting push-pull dichotomy happening right now of, we need to have places to put tenants, but landlords are also scared to take those tenants in. So it's a mess. If there was a way to sum it all up, it's a mess right now.
It's a mess. What a great summary of the situation. We're going to take a break for some messages and come back and explore this mess in a little bit greater detail. I want to talk about pre-construction condo pricing versus resale condo pricing. I want to talk about more suburban towns and rural towns. I want to talk about cottage properties. And so we're going to sort of overview the gamut of the real estate industry in Southern Ontario in the next 45 minutes. Stay with us, everyone. We're going to be back in 2 minutes. Welcome back, everyone, to the Brian Crombie Radio Hour on Saga 960. We're talking about the real estate market. Our guest tonight is Vanessa Topple. She's been on my show before talking about real estate and about a couple of other issues that are near and dear to her heart. And she's just launched a couple of different real estate shows on different TV stations and internet TV stations and things like that. She's very well versed in what's going on in the real estate business. Vanessa, let's switch from sort of single family homes, both buy and rental we've been talking about so far, to condos, if we could. So my understanding is that pre-construction condo pricing is 30% above resale condo pricing. And that's because the contractors, the developers are trying to keep their pricing up. And that the inventory of condominiums right now is something over 24 months. It's like 28 months, and the typical would be about 8 months. And so there's maybe, a year and a half to 2 years worth of inventory. And I get emails probably every half a day about assignment sales where people, have bought condominiums 2 years ago. They're now being completed and they've got to take possession. They got to close. They put down a deposit of 15%, $150,000 or something like that, and they can't get financing to close. And in some cases, the value is not equal to the amount of money that they gotta pay, or at least it's not equal to the amount of money they gotta pay plus the deposit that they paid. So tell me, what's happening with condominium pricing, and particularly with pre-construction condominium pricing?
I mean, anytime that you have anything that is pre-construction, there is that risk of, like I said, we don't have a crystal ball to see into the future. And so when you're purchasing something, say 2 years before it's actually going to close, there's a lot of things that can happen in the financial markets, with inflation, all of these different things that can impact how that's going to turn out in the end. And one of the biggest challenges that we've seen so far with anything pre-construction is the interest rates. So a lot of people, and this is where a lot of these assignment sales are coming in right now, because a lot of people were approved 2 years ago at a much less rate. Suddenly now, and that was great back then, but suddenly now they're coming in and they're being told, okay, here you're going to get your mortgage, but you have to get it at this rate now. And we've seen what it's done to people in the resale market. So imagine you've planned for, and everything around your finances has been for a certain payment you were expecting. And now suddenly, again, it's almost double or triple. And so this is where you're seeing a lot of these assignment sales coming in, and the prices do fluctuate as well. And there are a lot of people who, they see the value of the condo or whatever they're moving into be a little bit less. And then they're saying, well, do I want to take that on? Because now suddenly I'm already in the negative. And so there's a lot of controversy right now going on around that. It'll be interesting to see how it all gets rectified, because we definitely do need those buildings to keep continuing. I mean, they house thousands and thousands of people. So we definitely need the condo industry. It's just, it gets a little bit tricky for people when they're buying something like that 2-3 years in advance.
So I understand that this sort of decline in the pre-construction condo market and the extra supply is such that there's 80 projects in the Toronto area that have been put on hold this year, and that excavators are not busy and or looking at a forward book that is really negative. I had a gentleman on that's president of the Canadian Residential Contractors Association that said that he thought that by the fall there'd be 4,000 people in the condo construction business that would be laid off because of lack of work. Mm-hmm. All that sounds like it's a terrible recession in condo building that's coming up, that's either happening right now or coming up. He said the only activity that's going on is people finishing buildings that have already started, that there's no new buildings being initiated. He actually told me that there's a building downtown at Adelaide and Peter or something like that that's only had 2 sales that launched. Is that similar to what you're hearing, or are you hearing something different?
Yeah, I mean, it's definitely been a challenging time, I think, for condo developments. There's a lot of red tape that goes around it too, and with one of the things that the government is really trying to push right now is getting these housing starts going, getting these projects, shovels in the ground, getting them going. And it also helps and benefits the city when this happens. The city actually will get, funding from the government based on their housing starts. So it's an important thing for, this is where all levels of government, city officials, as well as these developers, all sort of need to come together to make these things happen, because one kink somewhere along the line really messes everything up for everyone else.
I agree, but if condos aren't being, started, aren't being initiated, how can government incentivize them to get started?
Yeah, I mean, it's one of those things where this is where, the interest rates that the government puts into place directly impacts the sales of homes and starts. So if a condo project can't get sales because all of a sudden people can't afford to do it, how are they going to start and complete a project with no sales or very minimal sales, right? It's still a financial business. I know in my business and in your business, we wouldn't start something we know we aren't going to get paid for necessarily. So this is where it all gets complicated. As soon as things like the interest rates start to go too high, well, then that impacts everyone.
Well,
And
and the banks won't lend the developers money if they haven't sold, 75, 80% of all those condos. And so therefore, if you haven't sold all those condos, those pre-construction condos, and taken the deposits and got the firm commitments to buy, you're not going to get the bank financing. If you don't get the bank financing, there's no way that you can start building. Okay, so let's come to these assignment sales. Are assignment sales a good idea? If you've got the opportunity to buy a condominium today that was started construction 2-3 years ago and is just coming to completion right now, and what I understand is a lot of these assignment sales are frankly real estate agents and other people, investors that bought a couple different condominiums based on the market that existed a couple of years ago and can't close because of the reasons that we talked about, and so therefore they're offering up their condominium purchase obligation and right at some amount of money. Does it make sense to do it, to buy those assignment sales?
so there's a few things that I'm always very wary about. Not to say that they aren't something that is feasible to do, but I think that people really need to get and do their homework before they even consider something like this. There's a couple things. So from the selling side, so the person who's trying to assign this sale, they also need to be aware, which a lot aren't, that you need to check through your contract that you signed with the builder. Sometimes in that contract, you're actually not allowed to assign that unit at all. And I've seen it happen. We see it multiple times show up, on the MLS system where they're trying to do an assignment sale. And then 2 days later, it's pulled off. And it's because, the builder has contacted them and said, hey, you actually can't do that. Or you can't advertise it. You can do it privately, but you can't advertise it. So that would be the first thing I would say to anybody who's considering doing one of these assignment sales. Check your contract. Have a lawyer look over it as well, because you really can get yourself into a lot of hot water just by trying to do that. For people who are looking at maybe the option to buy this or take this over, you also have to be aware, really, if you're considering it, really have a lawyer sit down and do their due diligence on this. The contracts that come out from a builder are very, very extensive. And there's a lot of caveats in there that you might not be aware of, a lot of fees and different things that come sometimes along with that contract. And so a lot of times what you'll see is like, a $10,000 bonus for you if you take this assignment. And it looks very attractive and you think, oh, I'm getting it for a good price and I'm also getting this. But just be wary that there are a lot of extra fees that are a lot of times involved with this. Lawyers will typically charge a lot more to do an assignment sale because there's a lot more involved with it. And then also too, for somebody who's considering assigning this, and this is something that most people don't realize, is even if you assign that contract, the builder also has to agree to this. So you could say, great, this person's taking it. But if the builder doesn't agree to it, you're not getting the assignment sale. And so it can become very complicated. And even if they do agree, you as the person who still had that original contract, if something falls through with the person it's been assigned to, you're still on the hook. So it's a very challenging, not impossible, but very challenging process that I think, it is doable at times, but just really go into it knowing full well your rights, responsibilities, and sort of the ins and outs of it before taking any of that on.
Now, the typical deposit that people put down on pre-construction condos, I understand, is like 15 to 20%. And so therefore, they've probably put down 15 to 20% of the money to do the purchase of the condominium already. And so therefore, what are they selling the assignment for? Are they selling it equal to the deposit that they've made, or more than the deposit they've made, or less than the deposit they've made?
It varies. So some people are trying to sell it for the value of the condo itself. Some people are trying to just get their deposit back and then you're continuing on. There is no sort of set structure to do these assignment sales because they are sort of out of the ordinary, and no builder really has it set up to do that because they really just want, whoever's buying it to continue and complete that sale. So again, it's very complicated to make sure if you're going to look at taking one of these on, know exactly what you're paying for. Is that money going to the builder, or is that money going to just the person who's trying to assign it? And you're still going to have to owe a bunch of money afterwards. You just really want to make sure that you're fully aware of everything you're taking on when you're taking on one of these assignment sales.
Now, I'm told that pre-construction condo pricing is 30% higher than resale condo pricing. If that's the case, why wouldn't you always just buy a resale condo?
So in some cases with resale condos, it depends on the age of the building as well. So one of the challenging things in condos is the maintenance fees. And so you're paying your mortgage payment, yes, but don't forget you also have a maintenance fee. And that maintenance fee in some buildings could be $300. I've seen it in some cases be $1,200 a month. So you really have to get to know what you want to have. And typically in the newer buildings, the maintenance fees are a little bit less than in the older buildings because there's obviously less maintenance to be done right away. So some people too are very scared to get into a pre-construction for all of the reasons we're saying now. Who knows in 2 years, am I going to have the same job? What happens if I have a health issue? With a resale, you're more likely to get into that within a few months. A pre-sale, who knows, right? So some people are starting to hopefully lean back into the resale, just to have that little bit of stability of they know what they're getting. But again, that maintenance fee can get tricky for them as well.
I like the pre-construction condo assignment sale because if someone's got, the threat of having to come up with the 80%, final payment in a certain length of time, because the condo is being completed, they've got that threat that they've got to come up with the money sometime soon. And if they can't, then they go into the assignment sale. If they've already put down 15 to 20% of the money, if you can get it for less than that, then haven't you a really good deal potentially?
It can be, like I said, though, you really have to know what you're getting. On paper, sometimes at first glance, they seem like a steal. And there are some people who will take somewhat of a loss if the threat of it too. But you really need to know what is also built into that contract. And there can be sometimes assignment fees that come along with this that the builder will ask for that are sometimes I've seen up to $25,000, depending on which case it is. So just like I said, it's not that I don't agree with them. I do think that there is benefit to them, but I think that they are very litigious and you need to really be very careful. Don't take it at face value of it. This sounds like a great deal and the person is panicked and they need to get rid of it because there's a lot more built into it usually than meets the eye at first glance.
But the situation is if the owner can't come up with the cash to close, they've got a real threat facing them, do they not?
They do. So, what will end up happening though in those situations is if they can't close, then the builder obviously will go after them for damages. That's just the way it goes. It's built into your contract that that's going to happen. You're not going to avoid that even if you assign this sale and say you, Brian, were the person taking over the sale and now you're having trouble closing it. Well, you're going to get in trouble. And also the person you took the condo from is also going to get into trouble. So the liability doesn't necessarily get off of them altogether because they're the original contract. Even an assignment sale does not get them out of that legally binding. It's just you're having sort of an extra. It would be like if you're subletting an apartment. That's what I like to liken it as. So, you live in your apartment, but you want to go away for 3 months and you have somebody come in, a buddy of yours, and rent and pay that rent. Well, if he doesn't pay that rent, even though the landlord's agreed he's subletting it, ultimately they're going to come after you because you're the one that's first on that. So it's very similar.
So the statistic that I've seen is that we're going to have more condos delivered this year than we've ever had in history in the past. And so these were condos that would have been started, 2 and 3 years ago. So, 2019, 2020. And they're getting completed today or in the next, 9 months. And these people that bought or not bought, but bought and committed in 19 and 20 and 21 on the pre-construction condos, all are facing higher mortgage rates today, are having challenges meeting the requirements, the stress test and the financial ability. And frankly, some of the appraisals aren't getting done. And so I think there's going to be a substantial amount of these assignment sales coming up. And I think it's going to be a huge opportunity, particularly if I'm right that resale condos are at 30% below pre-construction condo pricing. And so therefore, there's going to be a lot of pressure on the people that made these commitments. And I also think a lot of these people that made these commitments, I went to the same seminars that you probably were at and or were running where, they were telling people go out and get 5 to 6 pre-construction condos. And a lot of people did get 5 or 6 pre-construction condos back in the, 2019, 2020, et cetera. And they're all coming due in the next little while. And they're not going to be able to meet their commitments on many of those. And so I think there's going to be a huge opportunity for those people that have got cash, that are liquid, that are willing to negotiate tough and buy some of these assignment sales and buy them at significant losses to the original purchasers, at significant potential upsides to the new investors, because values have come down, because mortgage rates have gone up, because the threat of not being able to make good on the commitment that they entered into, because if they don't make good on that commitment, the builders can come after them. I think it's going to be a great opportunity. And I think people like you are going to make a lot of money on some of these assignment sales. I think it's going to be a great opportunity. My understanding that there's something like 800 websites in the Greater Toronto Area advertising assignment sales. And if there's 800 websites, there's got to be 800 times something of actual assignments. And I do think that your comment about some of them not being allowed to be on MLS and they have to be private is because the contractors, the developers don't want people to know how many of their units aren't being sold or are at risk of not closing. And so therefore, I think that what that does is that means that the market is actually greater.
I can actually speak to why the developers do that. And so the clause is never built in for that reason. What they want or what they are trying to prevent doing was actually what we're seeing happen right now is what they were trying to prevent doing. So they didn't want people coming in and buying 5, 6 condo units. And then and we were seeing this happen at one time where, you'd buy it and right before it would get to closing, you would say, okay, well, now I'm going to assign it. And then you would cash out. And this is what was happening. So none of the people who are actually buying these units were actually closing them themselves. They were trying to make a little bit of extra money by doing these assignment sales. And so the builders went, this is not what we're trying to do, is provide housing for people. And yes, investors are providing housing as well, but what they wanted to do was from contract to close, have the person who is committed to being there do the closing. And when they saw that uptick, that's when it started to get written into the builder contracts that either assignment sales were just flat out not allowed, or to deter them that they weren't allowed to be, published on the MLS and all the public websites.
I understand why it makes sense for the developer, but the impact is that there's actually more supply of those assignment sales than you can see on MLS. And so therefore, maybe pricing should actually come down a little bit more. Anyway, interesting discussion. We're going to take a break for some messages and come back and chat with Vanessa about sort of the other issue that happened during COVID, which was you had this massive price increase in suburban and even rural areas. And I understand that's sort of reversed. And so we're going to chat with Vanessa and see if that's happened as well. Stay with us, everyone. Back in 2 minutes. Welcome back, everyone, to the Brian Crombie Radio Hour on Saga 960. We're chatting tonight about the real estate market in the Greater Toronto Area. Our guest is Vanessa Topple, who has got 15 years of experience in the real estate business. I've interviewed her before, and she's also the host of several different podcasts and TV shows. If people are interested in your shows, how can they find them, Vanessa?
So there's several. There is boldtv.ca. is one of our shows. Crebtv.ca is one of the newer launched ones. That's all about commercial, industrial, retail, condo industry. So if you're curious about what's going in and all of that, Creb TV, CREBTV.ca is where to start tuning in for that one. And then we also have RHBTV.ca, and that's specifically around the rental housing market as well.
Fantastic. Thanks so much. So let's talk about this movement that happened, I think at the beginning and the first 2 years of COVID, while we were, all sort of staying at home. What happened is suburban 905 cities, and even the cities outside of that, and the 613 and the 705 etc., went up. I hear that Brantford and Barrie and Peterborough all had massive price increases. Excuse me, because people were not having to go to work, and so therefore they were moving to bigger homes with bigger yards and big home offices, so that they could enjoy working from a nice big home during COVID. And price increases went up dramatically. What's happening now?
So we're starting to see a bit of a shift. We're starting to see it level out a little bit. And this is because, again, that the interest rate increases kind of slowed down the market a little bit. Sort of, we're able to get a bit of a grasp back on that. So it's been nice for people who are trying to get or enter into the market for as a first-time buyer. If they've got, especially if they're moving in with family, this is where it's ideal. Maybe mom and dad, they don't want to have the big house anymore, but they want to buy a house with their kids. Maybe their kids are getting married and they've saved some money. That's where it kind of gets ideal right now. One of the biggest issues, I think, that where we saw this happen, and I think we'll continue to see it until we look at this as a whole. I mean, everyone looks at the states and how much, population they have and housing they have. We have the same, if we've got more land mass than they do, but it's really not usable. So if you think about where Canadians statistically like to live, we're really concentrating usually on the south of pretty much the whole country, with the exception of some of the places like Alberta and BC. But for the most part, we're really concentrated in that, mid to southern half. And so while we have all of this, what appears on paper to be usable landmass that we can be building all of these homes, it's really challenging because our infrastructure and the hub of where we work and where we are is really concentrated just on that lower sort of 2/3 of the country. And so I think that's what people need to realize as well. When we saw that sort of big spread happening during COVID, it was Toronto's prices got so high. So everyone sort of either melded out into the surrounding communities, was able to buy, which drove up their demand. And then they would move farther east or farther west, depending on where you're going outside of Toronto. And it just kept raising. And so now you're seeing communities that never had, Niagara Falls is one of them, where they still had a fairly reasonable real estate market. Well, now even their market prices are starting to go up. So while we're seeing in some communities coming down, we're seeing some that never had sort of that demand going up all of a sudden. So it's very
interesting. So I'd understood that some of these suburban markets, the prices were coming down. You're saying that that's not happened?
So in some they are. So, places like Durham region, some parts in the GTA, we are starting to see a bit of a dip in the prices. Not anything I would say terribly significant. One of the things we sometimes see, but not always. I mean, it used to be everything was over asking. That was just the common thing. It almost became, no one even paid attention to the sold over asking signs anymore. Well, now we're not seeing that as often. It still does happen, but we're not seeing it as often in some of these communities. But some of these farther out communities, either far east or far west now, are starting to see a drive up because their prices were still attractive enough and that people could afford them even with the higher interest rates. And so they've suddenly moved out there, creating more of a demand and sort of raising their housing prices. So it's not sort of across the country, a very static change. There's definitely highs and lows happening all over.
That's interesting. I'd understood that those markets were coming down, but I stand corrected. Okay, so what about cottage country? I'd heard that cottage country was down 20-30%. and that the supply was even going up even more because people were trying to sell those second homes before the increase in the capital gains inclusion rate, which is this week. So what do you think is happening in cottage country?
Yeah, I mean, I think it's a twofold process too. So, we are seeing demographic, we're seeing an aging population. And so we see with, some people, they just don't want to have to care for those properties anymore. So that's one thing. And the younger generations can't necessarily afford to live and maintain those homes anymore. And so we're seeing a lot of the older generations who've had, say, a family cottage for 40 years, selling those homes off now because they want to have the freedom of retirement and they don't want to do all of this maintenance. The other challenging thing I think that we also see with cottage country is that, it's a lot of work. If you're going to have it and you want to sell it, like you said, capital gains is coming in. And so all of a sudden people are exactly what you said, panicking. And do they want to take, a chunk of money that they don't have to normally pay and start to pay that out to the government or to whoever they have to pay for that? So I think recreational properties, as I like to call them, it's a luxury. And unfortunately, right now in our economy and just in our, economic climate, we have people struggling to pay for gas and food and things like this. And sometimes those luxury items or things that are seen as a recreational are just not priority for people anymore.
So is it a buying opportunity for people interested, or no, it's just fairly priced?
I mean, I think it's fairly priced. I think you have to take into consideration too, look again, anytime you're looking at buying secondary properties or anything like that, you also need to take into consideration, the fees and the different things that are surrounding that. Sometimes depending on where you go, especially in cottage country, your property tax can be quite high on some of those properties. And so that's something to take into consideration as well. And then also you have to factor in, the new advent of this capital gains and how that's going to impact you later on as well.
We're going to take a break for some messages and come back with some concluding comments. I'm going to ask her about Vanessa, about the rental market, because that's another website and show that she's got. And I think it's something that a lot of people are now paying attention to. Stay with us, everyone. Back in just 2 minutes with Vanessa Topple. Welcome back, everyone, to the Brian Crombie Radio Hour on Saga 960. We're talking about everything real estate with Vanessa Topple, who's got, it seems like, 3 or 4 different TV shows and internet shows and websites on different aspects of the real estate business. Vanessa, remind us of some of those websites and TV shows, please.
Yeah, so I have bulltv.ca is one that's events and highlights from the whole real estate industry in general. Creb TV is our newest TV show that we have. CREBTV.ca. That's everything to do with the commercial, industrial, retail, and condo industry. And then we also have RHBTV.ca, and that's everything to do with the rental housing market.
Well, let me then ask you as the last question is to talk a little bit about what's happening with rental, since you've got that rental TV show and website. The CMHC has come out with really attractive financing for rental. The government has taken the GST, HST off of purpose-built rental properties. I think the statistics that CMHC has is that the area that we've built the least of over the course of the last 20 years is purpose-built rental. The only sort of big increases to the rental market were investors that bought condominiums and then turned around and rented them out on a one-off basis, which is a lot of those challenges that you talked about with the landlord-tenant board. So, are rentals if you can't buy today because you can't afford those mortgage rates and you can't get qualified based on the stress tests, etc. What's the rental market like? It's pretty expensive too, right?
So the rental market is definitely not cheap, especially when you're going into sort of the private sector. So people looking for, even a 2-bedroom house or, part of a house. What we're seeing right now, especially in that side of things, is, there's a lot of people who are renting their house out, and they might have the first and second floor rented out to one person, the basement rented out to another person. We're seeing people renting out single rooms for, $500 to, I've seen up to $1,000. It's even gone to the point where if you look now, this is not on the MLS system, obviously, but if you're looking at some of the ads on different things like Facebook Marketplace or Kijiji, there are even people who are renting out, sharing a bed. So I think that's very telling as to
Sharing a bed?
sharing a bed.
Seriously, they're renting out half their bed?
Half their bed. So I think
I hope
that,
they don't
it
snore.
shows where we really are in a housing crisis, and people need a place to live, and they're finding they're coming up with different ways and creative ways. But I suggest for anybody who is looking for, or who has stepped into sort of that traditional path of trying to find a house on MLS, and this is coming from me being a realtor, and I'm saying this too, is look at the purpose built rental. So look at some of these, the apartment buildings. It sometimes gets overlooked, I think, by people because they just don't, they necessarily understand the process or how it works. But typically in those situations, you're not going to have to worry like you do when you rent a house. And this has happened to me when I've rented houses before, lived in the house for 2 years. Suddenly the landlord says, oh, I'm going to sell it. Now you have to move out. Or I've decided to move into it myself. Now you have to move out. When you get into these purpose-built rentals, you typically can be there as long as you want to be there. And your rent increases are much smaller. It's much more consistent. And so I think for people who just haven't looked at that as an option, really start to consider that, because they definitely can be a beneficial and more secure feeling way to have a rental these days.
Vanessa, thank you so much for joining us tonight and telling us a little bit about what's going on in the real estate market. I think it is, one of those discussions that a lot of us have because we just don't know what's happening. And I think the reality is we don't know what's happening. I think that there are a lot of different factors at play. I guess my summary conclusion is that the housing crisis that we've got is only going to get worse. And I think it's going to get only get worse for a couple of reasons. Number one, I think that because of the high interest rates, and yes, they have come down by 25 basis points and they may come down more in the future, but for the foreseeable future, they're going to be a lot higher than people expected and or planned for 2-3 years ago when they entered into pre-construction condo agreements, and or they just renewed their mortgage or entered into a mortgage on a single family home or whatever it was that they were buying at the time. And so therefore, when we have all of our mortgages being 5-year mortgages, they come due in 5 years, which is going to be the next couple of years, and people are going to be facing these dramatic increases in mortgage rates, and so therefore they're going to go and need to wonder about whether they can afford it. At the same time, pre-construction condominium developments have slowed down dramatically, so that the supply increase that we need to have to house our people is going to get worse in the future. And it's the same thing for single family dwellings. We just, as you said, don't have a lot more land for that if we're not expanding suburban sprawl. And they similarly, those contractors and builders have got the same problems with high land prices, though they've come down, but still high, and construction financing costs and labor costs and supply costs and construction material costs, et cetera, such that we're building far less homes than we need. And so therefore, our prices aren't going to likely come down, or not going to come down a lot. And so if prices don't come down a lot and interest rates come down a little bit but stay high, how are people going to afford it? And so therefore, people are going to get stuck, and we're not going to have the increased supply that we don't desperately need. And so I think our housing crisis is going to get even worse. It's going to get worse because prices are going to be too high for people to afford, and our supply is going to be less than we need. And I don't think governments have really understood it, and they're not solving the problem with red tape and regulation that we desperately need. They're not approving the developments that are going to solve our housing supply issues at scale. They're doing it with small one-off fourplexes and things like that. And so I am not positive about what's going to happen with our housing issue, but therefore, I do think there's a couple of good opportunities. And I think that some of these assignment sales are opportunities. I think some of the distress sales are good opportunities. I think people that are well capitalized, under-levered, that are going to take advantage of good opportunities could be looking at some of the best buying opportunities with upside opportunities in the future that they've ever seen. Vanessa, thank you so much for joining us. Really appreciate
Thank you,
it.
Brian.
That's our show for tonight, everybody. Thank you for joining us. I really appreciate it, and have a great long weekend. Happy Canada Day. Good night, everybody.